Thank you for tuning in to Starkey Multifamily Podcast. Today I have with me Logan Freeman. Logan is a real estate investor, developer, and agent who has found a niche in the industry, acting as an investment property specialist and actually representing buyers instead of sellers in the transaction process. Logan has also completed multiple joint venture projects, equity partnerships, and works as a developer, completing over 120 transactions in less than a year. Logan has found a process and relies on his most valuable priorities to guide his profit-producing activities. Logan is a husband and a father and a father to a brand new baby girl. Logan is located in Kansas City, Missouri, and can be found at livefreeinvestments.com. That's LIVEFREEINVESTMENTS.com. Hey, Logan, thank you for joining us.
Thanks for having me, Reed.
So Logan, let's talk about your history. We've got a great history that may or may not have anything to do with multifamily, but you got kind of an interesting background. Can you start with that?
Yeah, absolutely. So, I grew up in Jefferson City, Missouri, which is the capital of Missouri, small town, had a really kind of a farm-based town. I would say that there's been some good growth there recently, but if I could describe it, and this is no shame on Jefferson City. I loved growing up there, but it would probably be that it had more of the growth or the fixed mindset instead of the growth mindset that Carol Dweck talks about a lot. And so, when I got out of Jefferson City, I went to Warrensburg for college and was introduced to Kansas City really early on. And my eyes were just open to a lot of different things. And I had the opportunity to play football in college, had a pretty good career, and then had the opportunity to try out for the Oakland Raiders, which if anybody is a Chiefs fan, which I am, we stomped them 40-9 yesterday. So that was always a good thing. But anyways, I had the opportunity to go out there and I had kind of what I call a defining moment in my life, Reed, where I was cut from the NFL. I had an opportunity to make a decision, and the decision was: do I want to continue to play football or pursue football as a career, or do I want to use my brain to try to make capital and make an income for myself and my future family? And there was a few other things in my life that happened at that same time period where it just made sense for me. In my heart, I felt like I needed to go back to school, finish my master's program, and kind of get started with the next chapter in the book that we call life. And so I did. And, that landed me in Kansas City, and it landed me at a job, a job. And for about 5 or 6 years, I had a job. And about 3 years ago now, I was let go from that job. And, it was a pretty, what I'll call, interesting feeling to get fired from a job that you really felt like you were trying to do a good thing at. And it was also the best thing I think that happened to me at that period of time in my life. It was what I needed to kind of get pushed over the edge to start my own company. And at that time, my wife and I had just gotten married, and she was starting a new company, a new job at a brand new startup. And so a little less than what we will call stable. And, I had extreme support from my wife, Taylor. She actually started my LLC for me the day that I got fired. And that was pretty cool. I came home to my desk and papers were there, and I was off to the races. And so I started a small sales consulting firm, which you and I kind of chatted a little bit about, helping people implement CRM systems and training salespeople. I was just a head for hire, and I did that for about 6 months. But at the same time, I was working as the head of acquisitions for about a $45 to $50 million fund here. And, we completed a lot of transactions for that fund. I got a lot of great reps on just going through the transaction process, making connections, learning the ropes very, very quickly. Not a lot of agents and brokers can say that they've ever been through that many transactions, I guess, unless they probably have done that for, their whole career and they've been in it for 25 years. With that being said, we were doing smaller transaction sizes, apartment complexes, 50 units and below, but also a lot of single family homes. And so, I didn't want to do the single family home the route anymore. And so I sat down with those sponsors of that fund, and I said, "Hey guys, I know you're doing well, and I know you probably have a lot of money yourselves, but how did you get $50 million?" And they introduced a word to me called syndication that I had not ever heard before, and so I was hooked from that point forward. I started, reading, and some of these books right back here are some of the books that I was reading at the time to try to educate myself on syndication. I moved my license to a commercial real estate firm here in Kansas City, and I started putting together my own investment offerings, raising the capital myself, finding the deals, signing on the bank loans, finding partners that would help with the operations, and just putting all these pieces together. And happy to say that this year we did over somewhere around 40 million on the syndication side, and just about the same on the brokerage side for out-of-state buyers as well.
That's very impressive, for sure. The one part that I find very interesting is kind of the brokerage end of it. So I've really not heard of anybody really connecting people like you do. Can you tell me how you got involved in the brokerage first of all, and then kind of how it progressed into what you're doing today?
Well, I think that it's really important to get experience. And the best way that I knew how to get experience to help myself get into good investments was to learn from brokers and agents that were doing investment property sales. And then also, getting my head wrapped around how to actually purchase real estate, how to underwrite. And all I had ever done was represent a large fund and out of state investors. And so, when I looked at the marketplace, Reed, I saw that everybody was going after listings, and there was a ton of people on Bigger Pockets, on the podcast circuit, on LinkedIn, all looking for properties. And typically, and I'm sure you're obviously aware of this, but most of your listeners are probably aware of this. A lot of brokers don't want to work with other agents, on 100 plus unit multifamily deals. They want to take all of that fee and put it in their pocket, right? And
Mhm.
so, is that pretty typical for what you have
Oh,
experienced?
absolutely, yeah.
Absolutely. So at the same time, a lot of times out of state buyers have a hard time building credibility with in state brokers. And so what I tried to do was think about, okay, what's the pain point? And to me, the pain point was we've got a lot of great credible buyers that are unrepresented out in the marketplace. One, being unrepresented, unless you've done a certain number of transactions, is somewhat of a risky thing to do either way. But two, you know, they weren't being able to be taken very seriously. So I started only representing buyers, and I said, hey, I've got a process, and we'll walk through that process in a second, but I got a 5 or 6 step process that I'm going to work through. And, I'm not going to be left at the altar. I'm not going to spend all this time with you if, we don't have clear expectations on what you're looking for and what I can provide. And then also I'm going to open up my kind of what I'll call my track record to these other brokers, and I'm going to build rapport and relationships with them. So when your offer comes through, and you might have to potentially pay a portion of my fee, but one, you're going to be represented. Two, you're going to have boots on the ground. I'm going to open up my property managers, my attorneys, my lenders, my insurance guys, everyone to you. And so when these questions start getting fired off at you as a buyer, I'm going to be able to answer those questions with local people who know the property, who know the market, and your track record and credibility is going to go through the roof. And so, there's been a few times where I've even not convinced, but I've made our case to say, look, here's our track record here's Logan's track record of closing transactions. Here's 5 in the last month month or two that we've done. And here's what you can expect. Take that to your seller. I've vetted these buyers out. Take that to your seller, and let's find a way that, both sides can get compensated here. And I will guarantee, as long as nothing has been what we'll call misrepresented in the transaction, if there's still a good deal to be had after we go through our due diligence, we're going to close this transaction. And, that recipe for success has just really done well in the marketplace. And we've closed a lot of transactions this year, sizable transactions, and none of those people live here in the States. So I kind of sit alongside my clients. I can open up my team, but also I open up a lot of credibility options for them to get their foot in the door with these brokers and get their offers somewhat lifted above others, we'll call.
I mean, that's definitely one of the problems that we run against is there are some significantly large players in the area, and rightfully so. Before the deal even gets sent out to anybody, they're getting a shot at it or taking a look at it.
Sure.
So really, by the time it gets sent out on an email or posted on a website, we're getting kind of like scraps at the end, and then of course there's public websites that
Yeah.
once they go on those the Zillow LoopNet of of the world, they're pretty picked through. But so are you actually able to get beyond that level, or how are you getting a little bit better access on that end?
Yeah, well, I think it's a few different things that we try to do. One is, I'm always calling sellers and property owners myself. We have 8 or 9 active brokers in the office, and they know that if they get a listing and it fits the criteria that I've laid out for them, each one of them knows that I have credible buyers, and over the last 2 years, we've done close to $50 million of transactions. So it incentivizes our own brokers in our real estate brokerage to go find projects that never will be taken to market because they're going to bring it to me first and my buyers. So that's the first way, I would say. The second piece of that is every property has a story. And if it's on CoStar, if it's on, or I guess it would be the client facing would be LoopNet, or if it's on, being marketed, every property still has a story. I've got multiple stories of this year that there was a property being marketed, and maybe the agent, maybe it was a residential agent that somehow fell into a multifamily listing, and they just weren't necessarily well equipped to provide all of the information that a credible buyer would need, or they just overpriced it, and I had done a deal down the street and I had an appraisal. So there's been multiple ways that I've been able to take a look at listings, call the broker, walk them through, hey, here's what I think, here's what I can tell you about that area. Have you done any multifamily or commercial brokerage before? Hey, I just completed X, Y, and Z transactions down the street. I know for a fact your property is not going to appraise for that, and I probably can bring you an offer that's going to work for the banks, going to work for the seller, and work for the buyer. Will give me a shot at it. And I've done that enough times where I also have relationships with these brokers that, maybe I get a little more inside scoop that somebody else isn't going to, or maybe I get a call before 2 or 3 weeks before a property goes out and says, hey, what do you think this is going to trade at? Do you have any buyers that would like to take a look at this? And I have people flying into Kansas City every week, not necessarily now just because of the, we've got a lot of holidays coming up, but a lot of times, I'll have people here every single week. So I'll be able to bring buyers through and they'll get real-time feedback. So I'm always trying to find value add ways to bring what we'll call these listing brokers value that, they wouldn't have otherwise. So that's another way. And then, third is just having my finger on the pulse in the market here. I'm always meeting with the large players, seeing what's moving, seeing what's trading, seeing who's getting ready to sell, or they're thinking about selling, or maybe there's a broker opinion of value that went out that and I'm at events that these people are at, just chatting and having conversations and letting people know that we've got really great buyers that are willing to pay a certain price, and they are vetted and they're ready to move fast. So really it's a big part of what I do every single day is just educating and adding value to listing brokers.
You've mentioned a couple of times vetting the buyer. How are you doing that? What process are you doing to make sure that they can actually go to closing?
Well, yeah, so I have a little bit of a kind of like a five-step process. Step one is clear expectations, and all that means is, what is your return criteria? What are you going to need from a due diligence standpoint to feel good about the transaction? Let's see if there's an opportunity to collaborate, because what I'll tell you is there's a lot of education going on out there in the multifamily syndication world, and off-market deals are a little different than on-market deals. They're off-market for a reason, and they're off-market because they're probably don't have professional property management, or they don't have all the financials, or they don't have something put together. And so, you know, I think that having clear expectations on what we're actually getting from sellers, and then what we have to do as a brokerage to fill in the gaps, from a pro forma standpoint, and making sure that people are comfortable with that. So that's the first step, is just having clear expectations on what they're expecting from a return criteria, what they're going to need from a due diligence standpoint. Because what happens if you agree on a price and then you go into due diligence and you can't get the documents that you needed? Well, we're going to be in trouble, right? I mean, that's going to waste a lot of everybody's time. So why don't we talk through what you're going to need up front? Let me see what they've got available. Let me model it against our 1,000 units that we own here, so you can look at expense ratios. And let's see if you feel comfortable, and let's talk to some financing guys and see what they would feel comfortable with doing as well. So that's the first step, is clear expectations. So after we get past that clear expectation standpoint, I then coach my clients on track record. And, this is a really important step here. I need to know what projects you have closed. What is the business plan? Do you have financing set up? What's your exit strategy? And where's your resume? And a resume can be a written resume. It can be a LinkedIn profile. It can be a video. It can be a one-pager with just recent transactions that you have done. Are you raising capital? Is this your own capital? All of these things need to be upfront and center. So making sure that there's a really strong track record document put together. And that's something that I coach my clients on if they don't have one already.
That's a big question I think I hear a lot is, it goes right down to the can't have brokers talking to you, they won't call you back. And that can be because you're not local, but also, maybe you don't have that track record. So everybody's got to start somewhere. So I have my opinion, but I don't want to chime in. I'll hear yours. How does somebody who's coming in show a track record, or how do they boost themselves when they haven't closed a property before?
Yeah. Well, if you don't have a track record and you don't have the means to close a 100+ unit apartment complex, do you really expect a broker to take you seriously? That's a question that I would like to ask just the audience, just in general. That's one thing that I would ask. The second is, if that answer is yes, I've never closed this, or I don't have the means to actually do this, then who is it that you compare with that has? So, I mean, whenever I got started, I had a lot of real estate experience from acquisition standpoint. I bought some stuff myself, but I had zero multifamily and commercial experience. So what did I do? I went and partnered with 3 veterans in the industry that had over 15 years of experience that I could leverage and say, hey, I'm going to be investing in alongside these folks right here. Here's their track record. Yes, they were around in 2008, 9, and 10. Yes, they were buying. Yes, they didn't lose any properties. I can answer all of those, what we'll call objections, up front. And that's how I started acquiring property. So I think that's one strategy to do if you're new to the business. And I would ask myself, hey, flip the script on yourself. Would you take yourself seriously if you were inquiring about a 100+ unit apartment complex? That's a good exercise to go through. If not, how can we solve for that? Just 2.5, 3 years ago, I had zero experience doing it. So I went and paired myself with people who did. And I had to give away portions of my deals, but I would not be where I am now if I would not have partnered with those folks. That's one thing. The second would be, if you do have some experience, or you have been through a course on underwriting. Whenever I was working with a buyer group, I'm still working with this buyer group. We had some listings, and the best thing that I saw that he did was, he went through, downloaded the offering memorandum, downloaded the T12, downloaded his own pro forma, and then he walked through, hey, Logan, here's where I see some discrepancies. Here's where I see some, maybe the expenses are a little thin, or they feel a little thin, or the replacement reserves feel a little bit thin. Hey, I don't think the rents can get to this high. So they video recorded themselves going through their process of underwriting. It was a 2 to 3 minute video, but that showed me, one, who I was dealing with, two, that this person has experience at least looking at these deals, and then three, they even talked to, hey, with the financing that we're going to put in place here through Fannie or Freddie or whoever it was, that's why, this is why this particular project isn't going to work. If you take the time and effort to do that, and you start doing that with brokers and their listings, they're going to start answering your phone calls and your emails. So that's a nice little value add strategy that I believe Michael Block puts out there. But one of his students actually did, on one of my listings. So it was very interesting. And that really solidified that this guy knew what he was doing. He had the team in place to take down this property. And it felt like, even though he's not ever done it before, it created the illusion or the perception that he had. Does that make sense?
Yeah, I may even know who you're talking about, actually.
Yeah.
But I was always wondering how that would actually play out, how that looked from the broker side. So that's good to get kind of a broker's feedback on that.
Yeah, and I wouldn't do that on every single deal, but if you're infiltrating a new market, go on to who's got all the listings, or go to the big brokerages and see who's moving the product, and find a few of their listings and do it to them, right?
Mm-hmm.
It, and focus on the main, because it's the same thing in every market. It's the Pareto's principle, in my opinion. 20% of the people here are doing 80% of the transactions.
Mm-hmm.
And it's got to ring true probably in other markets as well.
Yeah.
So that would be the second step. So first step is clear expectations. The second would be try to build that track record up. And I think we've given some good tips on that, on how to do that. Do you want to talk through that anymore?
Yeah, I mean, I just I like your point. So that's my favorite thing. Again, like you said earlier, when I learned what syndication was, it was like, oh my goodness, why have I not known this my whole life? And the beauty of syndication is, I'm now saying I don't have to have every piece of the pie to complete a deal.
That's
so
right.
If I don't have experience, or I don't have credibility in a market, or I don't have money, or whatever piece I don't have, I got to have something to bring to the table. But I can put all these pieces together from other people and make a small piece of pie, on a big project, which is, in my opinion, much better than 100% of a single family house.
Totally.
So that's just kind of, you hit on it. And I just like, that's kind of my favorite thing of syndication is, when people stop thinking that they have to do everything themselves and start to realize that they can bring in people to fill in their weaknesses. I think that is probably the best lesson that I've ever learned in my entire life. So
yeah, 100% agree.
Yep.
100% agree.
So anyway, that was my 2 cents. Go ahead. We'll go to number 3.
Okay, so number 3 is clear communication. And this is it sounds pretty straightforward, but don't try to fool the broker and the team that you're working with. And what I mean by that is, I had a deal that I had a listing on earlier this year, and it was a great value add, about a 32 unit project. And the whole time I talked to this investor, and this is a great learning lesson for me, but the whole time I was talking to them, we were modeling the project as he was buying it, and the numbers and the return looked really good. And we really spent a lot of time with what the deal could be and would be. And at the end of the day, he told me, after we were under contract and he had flown here, that, oh, Logan, this isn't for me. I'm going to be bringing investors in here. And after I've seen the project and looked at the numbers again, it doesn't pencil out for us.
Oh no.
And my jaw just dropped. I said, I lost the listing. And so I lost about a $50,000 fee on that deal. I lost a lot of time spent with that investor, all because there was no clear communication. Now, I thought that I was being clear, but I think at the end of the day, I wanted to hear what I wanted to hear on that transaction. So the third one is communication, and don't try to fool your broker if you're working with one on the buy side. That's a really, because once you do, there's a few folks that I've talked to that have wanted to buy real estate in Kansas City, and us brokers, we talk, even though we we even though we don't work together necessarily, we talk. And there's a blacklist. There's buyers that are blacklisted, and I'm sure that's the way it is in every market. But that guy got blacklisted, and it was unfortunate for the seller. It was unfortunate for me, and a lot of people that I had spent a lot of time with on that. So that's number 3.
Yeah, I think there's nothing to add to that. It's plain and simple. Just
Yeah.
do what you say. Do what you say you're going to do. That's simple.
So number 4 is be willing to pay up front. And you don't necessarily have to pay with your time, but you do need, with your money, but you do need to pay with your time. And what I mean by that is, we need to spend time on just that, is the underwriting, which is, I need to understand how you're modeling the deal. I put together syndications and equity partnerships, so I can talk the lingo. Let me see what your waterfall looks like. Let me see what we're putting together on the value add strategy. What's the timeline? What's your financing require? How many reserves do they need? All of these things we need to be able to be willing to pay up front with that time. And a lot of times it's really, what we need to do is, and what I'll say, the people that I take the most serious is the ones that actually do spend the time to fly to the market and actually walk properties. Just last week, I had a couple guys. They're from Omaha, so they were able to drive down. But if you want to get in a broker's back pocket for listings, this is a good nugget here, Reed, that I haven't even thought about. Visit the market and meet the brokers. And if you can get in front of these folks and you can walk properties together, then they're going to see that you're serious, especially if you have gotten on a plane and flown to the market. Build the relationship. Once you have identified a market and there's a few properties that you feel like might be a good fit for your business plan and for an acquisition, go visit the market. We take people very seriously. If you can fly, then you're ready to buy, right? So, and you could say it the other way. If you can buy, you're ready to fly, right? One way or the other. I mean, that's kind of what we feel like here in the marketplace. So that's number 4, is be willing to pay up front.
I like that. So when do you recommend coming to see the property? So we've debated about that. You can go before you make the offer, the LOI, or you wait for, a best and final type of deal. So when do you think is the best time to go see a property?
If you have subject properties that you're negotiating on, I think it's always good to get a letter of intent in front of the sellers before you come, just so my friend Neil on LinkedIn put a nice video about this up, but talking about LOIs. But I think it shows a good faith that you're at least in the same ballpark, right? Because just like you said before the recording here, if the seller's at 12 million and you're at 7 million, you're not going to bridge that gap. That gap is just going to be too big. You can't build a bridge there typically. But maybe you guys are off on $1 million, and maybe there's some wiggle room and on both sides that you can make something work. I would say be proactive. If you have identified a market, then you can identify 3 to 4 brokers that you really want to start working with, or that have the listings. If you come and meet with them over a 2 to 3 day period, it's exhausting. The guys that come, I put them through the ringer. I mean, we are on our feet. We are going through properties, seeing the areas. I mean, they're long days, but all of those guys and gals, they have all bought properties. And so I would say if you're just trying to infiltrate a new market and you found one that you're really bullish on and you're going to be making offers in, the sooner the better that you get there and you meet with your property manager, you meet with your lender, you meet with your attorney, and you meet with these brokers. So you can then say, hey, I have the team that is here local as well, and we're ready to move. So it's almost like a proactive thing. So I would say specifically to your question, if you have properties that you've identified, probably to put LOIs out there would be a good thought. But even before that, if you're bullish on a market, get there, build that team up with your boots on the ground through your operations and acquisition team. And then you can talk intelligently to those brokers, and you're only going to continue to solidify the confidence that they have in you as a buyer.
Yeah, that's a fantastic point. Very good.
So we've talked about clear expectations, building your track record up, ways to do that, having clear communication and not fooling anybody, be willing to pay up front. And the last one is, this is from my traditional sales training, Reed, but it's don't run through yellow lights. And I'll give you a great example. I was negotiating a 68 unit apartment complex last week, and the buyer is in a situation that there is a 1031 exchange, and he wanted to close the property by the end of the year. I didn't know this, and I have not verified this, but in California, they're putting measures on people that are completing out-of-state 1031s that are prohibitive to doing them. And what I mean by that is, later down the road, after you have completed a 1031, if you don't stay compliant with certain reporting measures with the California, the legislation that you're involved with in California, they can actually take a 1031 and make it invalid. And I have not verified this. This was the first thing I have heard about this. But so the reason he wanted to close by the end of the year, because we wanted to talk to our friend Yona Weiss and do a cost segregation study and apply some bonus depreciation. And my buyer was happy to do that as long as we could close before the end of the year. Well, through my networking, through my talking, through my conversations with the seller's broker, it really felt like that timeline was probably not going to work for him. He was also trying to 1031, and I was talking to a different broker in a different market, and he sounds like, man, that sounds like the guy who's trading into our listing over here. Well, I found out that listing was falling apart, or that transaction was falling apart, and I knew that the buyer was probably not going to be able to close before the end of the year. So we got all parties on a phone call. We started working through these, red lines on the contract and all these different things. And it got down to it. There was one sticking point, and it was, hey, seller, I'm trying to close by the end of the year. And the buyer and the seller was trying to put a provision in the contract that allowed him to extend the contract. And I just asked, that came up, and we're all kind of silent. I used what Chris Voss calls, embracing the silence, or using, I can't remember exactly the term that he uses, but I used silence, and we just sat there for a second, and we found out that, the seller goes, well, I'm going to probably exercise the right to extend this contract. And I said, okay. Well, the reason that was a big deal was because, one, now we have to go to a different funding scenario where it's not a debt fund that can close in 30 days anymore. We actually need to use just a regular financing, and you need to be okay doing a 1031 doing that. And if so, here's what we do. And out of nowhere, instead of running past that yellow light and getting under contract and then having all these things come up during the due diligence period, the buyer said, you know what? I like this deal. We're going to move forward. We'll let you put the provision in there. We're going to go the traditional bank financing route and not do a debt fund, and we're going to be all on the same page. And boom, 2 hours later, we had a signed contract on a $5 million 68-unit apartment complex here in Kansas City. So the last point that I want to make is just don't run through yellow lights, and get everything cleared up front so that you can perform.
Yeah. Well, that was fantastic. I'm glad you put that together. So yeah, and one thing I wanted to kind of mention, since it's fresh on my mind, we've been working a lot on systems.
Yeah.
So it's completely in a different topic and directions, but I've noticed talking to you that you've got certain things systematized for the way you do things, the way you've got lists for things, and we talked a little bit off there in the beginning.
Absolutely.
Too. So how do you approach creating systems for doing things? Like you said brokers working for you, making phone calls.
Yep.
You've got, I assume, systems for having, how they talk to who and how they look for properties. how do you kind of approach your system generations or generating systems in your business?
Well, I'm the type of guy that if I hire a vendor or somebody to work together with, I want to make sure that the task that they are doing has been proven. And let me dive into that a little bit. So I spent this year just trying so many different things on LinkedIn, and I found a way to reach out to, systematically reach out to a certain number of people a week. I was doing all of this manually, and I had messages that I would send to them, and I figured out a good messaging program for what I was doing, and I figured out the right keywords to search to invite the right people that started creating business for me. So I went out and I found a company that would allow me to step away from doing that every single day. And I hired them to reach out to people on LinkedIn for me, and we utilize my messaging as well. So I try to prove out whatever I'm hiring out. Does that make sense?
Yes.
So like I'm proving it out so it can be a win-win scenario. And so I did that on LinkedIn. I did that with podcasts this year. I got on about 15 or 20 myself. Then I said, you know what, this is doing a really great thing for my business. I think I'm adding value, and people seem to like to listen to these things. And it feels like this might be the next wave of marketing. So I went and hired a company to book me on podcasts. And so now I don't do any of that. I send them a list of all the podcasts I would like to be on, and they are actively out there getting me on podcasts. That's another example. I have an executive assistant that helps me with a lot of coordination, a lot of setting up conference calls, a lot of scheduling. So whenever we have a transaction that comes into the pipeline, I can spend 10 hours a week trying to figure out how to schedule inspections for the bank, for the property management company, for them to fly into town. And I'm not a details guy. It's not good for me. Obviously, we missed our first interview because I missed the details. Like, that's really bad on my part, but I know that. So I have an executive assistant that helps me with that, as well as she does a lot of the transaction coordination for me. To take it one step further, I hired a full, for 15 or 16 months now, I've had a social media marketing agency handling all my posting. And we found a really great way. I read a lot of different resources, a lot of different articles, and we found a great way that I can forward it to them via email, put a little blurb in there, and they'll schedule it out. And they send me a list on Sunday of everything that's going out in the AM and PM on which channels, and I look it over and I switch things around and I say, hey, I'd like to do this here, this there, don't forget about this. And they also handle my website. And so I that had a lot of success with that. So I took it another step further, and I've hired a full marketing agency that now handles they handle the back end. So what we're building right now is what we call our investor acquisition system, or our client acquisition system, where I'm going to have a couple webinars out there that are evergreen talking about this process that I just walked you guys through. Hey, if you're doing a 1031 exchange and you want to purchase in Kansas City, here's the returns that we're seeing. Boom, boom, boom. Walking them through a webinar on the 1031 side and on the passive investor side. And we've toyed with opportunity zones as well, because we're completing some opportunity zone developments as well. So I don't know if I'll do one on that, but those 2 points, those 2 subjects are what we're going to have out there. And we're going to put ad spend behind those, targeting where all my transactions come from: Denver, the Silicon Valley, and the Northeast, and some Florida. And so they're handling the back end system to, bring people through what we'll call a journey, an investor or client journey. So once they opt in, watch the webinar, instead of having a phone call with me directly after that, that's what I've been doing this year. I'm going to have a video that walks through an underwriting example that we've closed recently. I'm going to have a video introducing them to the different banks. I'm going to have a video introducing them to different property management companies. And these are all going to be separate emails that are just scheduled out, 1 or 2 a week, because each one's going to have what we'll call homework for our buyers to go through. And once they get through that investor or client journey, at that time, they're then going to be able to push a button that says, talk to Logan, invest now, whatever it is, And instead of me having to take them through every single part of that journey or that process, my time is going to be maximized because I am now going to be talking to people that have either fallen off throughout the process or have gone through the whole process and they're vetted and they're ready to go, and we can start working together. Because I can only work with 2 to 3 clients on the buy side at a time, because once I bring a client on from a acquisition standpoint, if they're doing a 1031, there's obviously a timeline, or if they've identified properties that they want to go after, there's a timeline. And I don't like to shop out deals to 50 different buyers. It's just not good business for me. So we're trying to figure out a way, and I think that will accomplish once they go through that journey, that process, then they can reach out to me and we can start having a real conversation.
Yeah, that's fantastic. Well, Logan, that's been a incredible wealth of information you brought today. I appreciate all that. If somebody wants to get a hold of you, what is the best way and how do you want them to reach out?
I think the best way is on my website, which is just livefreeinvestments.com. And there's a contact us page. And again, there's a Calendly link in there, Reed, that people can go in there and we can schedule 5 or 10 minutes. Now, I'll tell you, but by the end of December, you'll have to probably opt into a webinar and watch me on video a few times before you can actually get me. But no, I'm just kidding. Go on the website, livefreeinvestments.com, and that's the best way to get me.
Perfect. Well, thanks again. I appreciate you coming on.
Thanks, Reed. Thanks for having me.